overly enthusiastic is because the three of us were just all in the green room, and it honestly looked like every one of us was about to fall asleep. Bobby and Mike, do you agree?
Yeah, I'm a little tired.
Yeah, no. I'm having some caffeine. I'm going to commit to the energy that's going to keep this ship afloat. First, before we go, I'd like to thank our sponsors, Independence Arc Farms. Amazing. We always complain about the big companies taking over the food source. There is something we can do. Patronize Marco at Independence Arc Farms. The American Gold Exchange. Hold physical gold and silver. This is important. The next leg up might not be as it might not be as elegant as the first one. So things could get a little dicey. And our most important sponsor, unfilteredinvestor.com, which features the unbelievable technical analysis of Mike Arnold and Bob Iacchino. And I'm there for comedic support. How are you guys?
Good. How are you, buddy?
I'm not bad at all. Let's go with, by the way, Mike. So we're like up 2% almost in the first 2 trading days of the year. That obviously means like we're going to have like an up 1,200% for the entire year. That's correct, right?
12,000%.
12,000%, whatever. Yeah, 2% in 2 days is a lot. Okay.
We could just annualize it. We'll do the simple math. Let's annualize it. We'll even go off 365 days. So we'll call it. We're gonna be up 700% this year.
Sounds good. Yeah, but it's compounding too. So
yes, I know. I did simple math, not
you did. Oh, you did simple, right? Okay, yeah.
And I approximated simple math. So I don't know what you call approximation of simple math, but yeah, it's a new kind of math.
It's the best kind. Okay, so I should have bought this when it broke back out of the rotation zone. Give us an analysis of this.
Yeah, it's rotating up. I've been talking about the magnet price being 7,000 for the magnet price has been 7,000 since back at end of November. So we're approaching that now. And if we do break above, we have a harmonic at 7,007, 7,005 to 7,007. And then the next major cluster is 7059 to 7060 if it continues higher. There is, if we do pull back, there's anything can happen. So I always got to analyze both sides. If we pull back and close below Friday's low in the S&P, it triggers a minor double top pattern for a possible pullback to retest the mid-December lows. Other than that, there is a potential weekly double top. Now, if we get above 7,060, that is off the table. But if something strange were to happen and we had a bigger collapse and we closed on a weekly basis below the lows from the week of November 17th, then that would trigger a double top pattern. Other than that, you can see on the weekly chart, rotation zone is still positive. The last pullback in the rotation zone in November, that triggered a buy pattern in the week of Thanksgiving is still playing out. We still have higher prices. The last little pullback was the 80 EMA on the weekly, and we're bouncing there. And on the daily, we pulled back through the end of the year, end of last year, into the rotation zone, and we've rotated back up. And yesterday we did trigger a percent B buy, a daily percent B buy pattern was triggered yesterday. So I'm still watching for higher continued prices. The only thing that would make me take pause in the short term now is if we closed on the daily basis below 68.66. Then
that's the low of the wick on Friday, right?
That's the low of the wick on Friday, which would be a minor pullback. Could pull back, again, to the middle of December lows to the 50% retracement harmonic. The only key line, assuming we don't make new highs, which by the end of the show we could.
Yeah.
But you're going to approximate. If we closed on a daily basis below 6,700, it shifts the short-term probabilities where we could test the lows from November. So just remember 6,700, even if we eke out slightly higher highs, 6,700 is key on any more substantial pullback.
Bob, I have 2 questions for you, actually, and the second one's more important than the first. The first one's a style question. When I wear this shirt, my wife says a grown 60-year-old man shouldn't wear a hoodie. What is your feeling on that, first off, being a little more into fashion than I am?
At this stage, I disagree with her.
Okay.
I think you should wear things like that. I think as long as they fit well, which I
Yeah.
can't really tell if that one does. Might be a little big on you, but as long as they
I
fit
think
well,
I'm
I
a
think
little
it's fine.
small in it is more the
Well,
equation.
fair enough. Fair enough.
Okay.
But I
The
just no,
second question.
I don't think that at all.
Okay, good. Now the second question is more important. Is that he mentioned unless something you didn't say calamity, but unless something collapses us, things are looking pretty good. The Trump decision on tariffs is set to come down from the Supreme Court within the next couple of weeks. Do you have a date on it, or is it up in
I
the air?
don't have a date. No, I know it's due
I
within the
thought they
next 2
talked
weeks.
about Friday.
Okay, because I did too. And Polymarket now has overwhelming odds that they strike down his ability to institute tariffs. If I was reading Polymarket correct, do you think that's a shot to the nards for the stock market, Bobby?
Definitely, because if they're quote unquote unconstitutional tariffs or unconstitutional actions by the executive, right? Stretching the powers of the executive, that money has to be given back in some way, shape, or form.
Yeah.
And I just think that's catastrophic. Now, maybe the Supreme Court leaves some sort of opening, but that's not really their job. Their job is to rule on the lawsuit, not to
Yeah.
say, okay, this is unconstitutional. Here's how I think you should handle it. It's not what
Yeah.
they do.
No, it's not
Mike?
what they do, and they're politically motivated. It's obvious because they're appointed by. There's never been as much of a bifurcation in the political system as we've seen now. Well, I'm sure there has. Back in the 1860s, when they all picked up guns and killed each other, people were pretty bifurcated then. But right
Yeah.
now we are, and whoever gets appointed by whatever party tends to side with them, and it's really, really frustrating. So I hope that these guys don't mess up a good thing because they're that bitter and petty. Bobby, what do you got?
I just, on that note, I really think that the separation between the two parties literally dooms us as a country and as an economy because you get this tit for tat, I'm going against them no matter what attitude. It's actually illustrated pretty clearly in this Venezuela thing. I'm not saying it's good. I'm not saying it's bad. I don't know what it is.
Me
I'm not
neither.
saying it's for I'm not saying it's for freedom. I'm not saying it's not for oil. I don't know what it's for. But the fact that these people are protesting in New York, there's a very specific example of protesters dropping their Ukraine flags and then dropping their Hamas flags and now carrying Venezuelan flags around. And Venezuelan people are in the street going, "You don't understand. We're happy." And I saw one guy screaming at a Venezuelan who was living in New York, saying, "You're a traitor to your country. You're murdering Venezuelans." It's like it is just simply opposition and nothing
There's
else.
no question about
So
it. And to
that's
put a
the only
finer
reason
point
I
on
hope the
that,
Supreme Court finds this legitimate so that we don't have to go through more of that again.
no doubt about it. But to put a finer point on that, on January 10th, 2025, the Biden and Harris administration raised the bounty on Nicolas Maduro from $15 million to $25 million for his arrest. Okay, so is that the same as going in and dragging him out in the middle of the night? No, it's not. But does it mean you can say, "Oh my God," and clutch your pearls that Donald Trump does this? No, everyone's complicit in the shit. You guys just didn't do it, and Donald Trump did. So everybody's wrong and everybody's right on this whole thing. But anyway, we're supposed to talk about markets. So what's your next question, Robert?
Well, that actually goes to Mike. Do you have any sort of like dramatic downside that you could see if something like that happens? Because I definitely think it's potentially in the cards.
Oh, dramatic downside.
Yeah.
I mean, the minor one we already talked about, but if you close below 6,700, that shifts the probabilities that we could retest those mid-November lows, and we do still have a massive weekly double top, which would have the weekly rotation zone out of the way. That's the worst case scenario. Now, if we were above 77,060 before that happens, it's off the table. But I just looked up. Supreme Court says Friday is opinion day with tariffs pending. So it's looking like it's going to come out Friday unless something gets delayed. But it would definitely come out in the next little bit, in the next, week. So at this point, that's the key thing. I'd be watching 6,700, and then the trigger point would be if we really collapse to be 65.25.
Interesting.
But
Yeah.
again, any pullback, even if we pulled back to this 50, I'm just going off it again. We might eke out a new high tomorrow. We might out a new high Thursday even. But roughly this 50% harmonic around 67.50, that's in the middle of the weekly rotation zone again. The bottom of the weekly rotation zone is about 67.22. So even if we pulled back into that area, it could still set up for another buy. That buy might not go to new highs, but it could still set up for a secondary bounce back up. Catastrophic would be a close below 65.25 would trigger a possible catastrophic, or I can't call it catastrophic, but a significant move lower.
Because even a move down to the 50 is only about like just under 7%, right? The 50 week.
A move down to the 50 week.
Yeah.
Let's
Because
see.
I could see that happening going back to basically the breakout level of June 30th of 2025 and those tops in December and February on the weekly.
It would be about an 8.5%
Okay.
move down.
Fair enough.
A 10% move would be roughly to the first target of that double.
Okay.
6,300 area.
All right. What do you want to look at next, Bob?
Let's look at the NASDAQ because I think people expected, or at least I shouldn't say people. There was a lot in the media about Jensen Huang talking about yesterday. He spoke at CES, right?
Yep.
And he basically said that, there's a new chip coming and profitability is great and everything's great and NVIDIA is great. I'm paraphrasing, of course.
Yeah. Well, you're also making fun of the way CEOs speak, right? CEOs always, their job is to say everything is great, right?
They're always insanely positive. And even when they warn, they give you sort of a time frame and then they talk about how they'll rebound from that warning.
Right.
So, but I don't see the NASDAQ weekly personally as that strong of a chart. Mike, am I wrong on that?
No, the NASDAQ, you can hear, the weekly is definitely lagging.
Mm-hmm.
Definitely lagging. Where you saw the S&P, the Dow go to new highs. If we just look at the March, just specifically the March contract, the highs were set back at the end of October, and we're still a fair ways off from that level. We're still about three and a quarter percent down from those levels on the March contract. You look at the continuous contract, it's still holding the weekly rotation zone. We do have a potential weekly double top in there, but the NASDAQ's definitely been lagging. If I just jump to the Dow real quick, you see that here, this week we're at new highs.
That's an exclamation point. Yeah.
Yeah, closing in. I have a massive harmonic. We just hit the minor harmonic. The next key one is 50,000, 50,006. So 50,000, which we could tap out before the end of the week, maybe before the tariff ruling. Which would that be interesting? Dow 50 and then Dow dives.
Yeah.
Russell, with this week, it's not yet there, but it's approaching the beginning of December all-time highs. So, and we're right there. So this could take out highs, and we do have a potential double top in the Russell too. So there are topping patterns in all these markets, but the NASDAQ is getting back to that is definitely the weakest. I should say there are potential topping patterns. We won't know until we're running out of momentum to the upside, which is the market's looking a little heavy. But just because the market's looking heavy, that does not mean you put on a massive short position. I would still be looking, if somebody's concerned about stuff heading into Friday, volatility is very low. The 30-day VIX is below 15. It's 1475. I think 7-day vol is down at 7%. Okay, so if you're looking for hedges going into Friday, could something happen? I'd be looking more so than getting a short position. I'd be looking at hedging something for a rise in volatility. And you can play this in individual names. If the volatility is depressed, you could play it in the spiders with, I haven't looked at exactly where the vol is on the spiders, but if the VIX is trading that low, the volatility in the spiders can't be way out of whack. So, you might want to put on something that can take advantage of a spike in volatility if you're afraid of some downside risk.
Right. So you can do that with options themselves or with the VIX contract, right? And so if you look when you're looking at the weekly bars, so realistically, are we talking that it could be 6 months time frame you're looking at, right?
If we were to trigger a topping pattern,
Well, anything like just the general sense of a chart. That's obviously not an hour to hour trading. It's more month to month,
no,
right?
this is not. Yeah, I mean, this whole.
So
If you look, we still have the lows from last April. So what's that about? We have about 9 months on this chart
that you're
right now.
considering in the chart. So that brings
Yes.
my question is that if you look at all four of those index and you had a gun to your head now of which one you think will be the strongest of the next first 6 months of 2026, what would again, you're not being held to this answer at all. This is just if one looks better than the others, which one would look better?
The two strongest are the Dow and the S&P, then the Russell, then followed by the Nasdaq. So Nasdaq's bringing up the rear.
Right.
Does not mean it can. It can't. It might play catch up at some point. But Bob, to your point, you were talking about the CEO of NVIDIA, right?
Yeah.
Normally, with this kind of stuff, we'd be getting some pops on NVIDIA. Look at this. We've had a double bottom trigger back before Christmas. It's gone sideways. With all this news out, even from CES, and he was talking about 10% more efficient chips. All of a sudden, where's the pop? There is no. It can't even follow through on a high probability pattern, and that should tell you something. I'm not saying this can't start popping, but if we take a little zoom out on NVIDIA, we're trading at the same level we were at the end of September.
Wow, that's dramatic
it went up
to know.
a bit, it went down a bit. We're trading virtually unchanged from the end of September.
Right.
And not far off the highs from the beginning of August. If it dips a little more, we're back to the highs at the beginning of August. So something is definitely changing. And if you're monitoring something, this is still, it's becoming a little sloppier, but we do have a massive potential head and shoulders play in NVIDIA, not near triggering yet. If you want a number, remember about 170. Just jot down or set an alert around 170, because if this pulls back and we close down below 170, that could trigger a substantial topping pattern in NVIDIA, which then you could see some of those other weekly double tops potentially triggering because of the market cap of NVIDIA.
Do you think now that Nancy Pelosi is retired, that question was just going to be a bunch of nonsense? I'd like to retract that question. Okay, go on.
What, things will change because the best trader of all time?
Best trader, well, second best trader of all time. Hillary Clinton is inarguably the best trader of all time.
Well,
Hillary Clinton made
futures trader.
Yeah. Best. Well, the
futures.
Just consider what Hillary Clinton did is like a guy working his life to make it to the major leagues, hitting 9 home runs in his first 9 at bats, and then abruptly retiring. That's what Hillary Clinton did in the major leagues of futures trading. And I defy anyone to show me a futures trader who was better, smarter, and more successful than Hillary Clinton. Full stop. She turned $4,000 into $150,000 in 9 trades and then quit. She's a legend. Going on.
By the way,
yeah,
think of the market she traded. Okay,
was it cattle, right?
Yes. Now you guys have been on the floors, right? What is one of the, let's say, the sketchy, I'm not saying it hasn't changed at this point, but back then when she was doing it, what would have been one of the sketchier pits to be trading in, maybe?
As a representative of the futures markets, I refuse to answer that question, Bobby.
I will answer it.
Currencies and softs. It would be currencies and softs.
I mean, come on.
Yeah.
All right. That's like, it's not like it was still, I'll call it a legitimate market, but it was on the market on the wrong side of town. Let's just put it that way.
But by the way, to put the people who are watching too, and I sometimes get a finger pointed at me like, oh, you're such an ass for calling out the Hillary Clinton thing. If she had made 2 trades that were that successful and she quadrupled her money in each one and then quit, it would be the most ridiculous thing ever. The fact that she made 9 straight trades that were each home runs is the odds of that happening are like getting struck by lightning 5 times in 5 days. We think that's about the same thing, Bobby? Yeah.
Yeah. I like your 9 for 9, but I like that one too.
My question is, Why would you quit?
Well, of course, yeah. Yeah, it was too easy for her. It's too
Forget
easy.
politics. Just become the best futures trader of all time.
And then you can buy the presidency. We've seen that before.
Exactly.
Yeah. Anywho, what other names you got?
I just actually, before we go on, I just want to throw out that Widge said, I don't know what it's for. He was quoting me about the Venezuela. I don't want to call it an invasion, the operation that brought
Right.
Maduro and his wife here. He says, I don't know what it's for, quoting me. And he said, I think that's the issue for a lot of us. I think that's the big problem. So that's a fair statement, I believe.
Fair as hell. Yeah. Moving right along.
What market next?
Let's look at gold and crude. Actually, let's look at crude since we're talking about Venezuela.
Yeah.
Well, what this is, again, we have light crude because what's a lot of the crude in Venezuela? It's
Heavy crude. Yeah.
So, I mean, I want people. I clarified this on my live stream yesterday, but people are like, what? Why is crude up? Well, I'm like, all right, this is light crude. Then you have Brent crude, which we could look at Brent crude too, which we don't really follow this on here in the newsletter. I mostly follow light crude because I like it most for trading. But heavy crude, there's not even a futures contract for heavy crude, at least in the
That we're aware of, right? Yeah.
Yeah, it's all spot market and it's based off spot market. So you got to keep your grades of crude right when you're saying why is the light crude oil futures reacting like they are? Well, because it's still light crude,
Right?
And it's still caught in a lower range bound. It's still been held. If what I am watching specifically, I cannot get anything besides pulling back to key support and getting a short-term bottoming pattern, which has then been looking for moves back towards the 50. The 50 EMA on a daily continuous chart, if you've been looking at it since end of October, has been as it's ground lower, it's this green line.
It's been
the key resistance. And on the weekly chart, any push into the weekly rotation zone, once it gets into the weekly rotation zone above the 8 AMA, we start getting selling pressure. Both of those happened yesterday, or we bounced up there. We had a little intraday buy signal that hit the target area. And then today, just boom. But other than that, other than scalpy trading, crude has not been, there's been no follow through on moves besides, what was the last follow through? You got with the contract roll, we got literally after contract roll 3 up days. That's been the move. And now we're back in consolidation and approaching breakdown level again.
So it still looks like garbage to you, right?
Yeah, there's nothing long term that I can say other than if we're dropping back down to between 55 and 56, I start watching for short term buy patterns. The challenge is you got to be nimble because it might only take a couple days to hit the upper end of the target, and then then I would have to be out because it's hit the target. There's no major bottoming pattern yet. And we have a pretty solid floor. This 55 area, if you go back, you see spiking lows in April, got down to even 50. What was the low there? 55.12. In May, we got down to 55.30. In December, we got down to 54.98. So I'm still looking for buy patterns there unless we slice through there that 55. But Bob, you know more about the extraction process and everything else. Where do a lot of even shale stuff, where does it become where it's not worth keeping the lights on?
Well, if we're talking 5 years back, it was $40, but it's dropped since then. One of the things that's been happening, and by the way, the break even is lower than it used to be. It's more like the mid to low 30s now, but there's new technology that allows them to get a lot more oil out of a single horizontally fracked well, but that is still expensive. So the interesting part is when crude oil gets lower, we'll actually have that price situation where when price gets too low, the production is actually going to slow down deliberately because they'll stop extending the fracking into that second wave of technological drilling. So it is down by the mid 30s now, But there's a lot going on. I was looking at a lot of this today. Again, I hate to focus on Venezuela, but a lot of people are out there saying 18 months, which is incredibly aggressive to get. That's if everything geopolitically goes smoothly. 18 months, if all of a sudden US companies rush in and start assisting the drilling process, they're going to start. They went from 3.5 million barrels to 1 million barrels a day. And they say they can get it up to 1.2 to 1.7 relatively quickly and above 2 million barrels a day in 18 months. I find that really hard to believe.
And again, that's heavy crude.
Yeah, it's heavy crude. So it has to replace other heavy crude, right?
Right.
They're not fungible, but heavy crude is more versatile. You can refine heavy crude into most products. You can't refine light crude into all products.
Except for gasoline, which is the most important product for light.
Well, you can't get gasoline out of heavy crude. You just have to take all these other distillates and black tar and all this other stuff out of it first. The refining process is almost cost prohibitive.
Interesting. Okay, that's fascinating. Okay, moving right along. Gold.
Gold. We're not quite. I have a potential double top on here. We're a few bucks away from it. It'd have to get above 45.09. It looks like we're going to get there. That's the key thing I'm watching are the lows from December 31st.
If they make a double top, which is what percentage of the two tops?
Within 25%.
Yes, and then if it takes out the bottom, that's the negative pattern.
Correct.
Right?
And that bottom's
for new watchers.
84.
Yeah, that makes sense.
That would be I'll call it a medium term topping pattern. Other than that, prices still up on gold. If it does take out the highs from right before New Year's, the Monday, was it Monday or Friday? Sorry, it was day after Christmas. Friday.
Day after Christmas. Yeah, right.
The next major harmonic area is 47.16 to 47.45. The next minor levels using the reverse harmonics, the next minor level is 46.21 and 46.59. So the double top, the potential double top would be invalidated if we get above that 46.59 price.
Okay. That makes sense.
Silver, let me just jump to silver because silver has fully confirmed it's now got a potential double top. It has not confirmed the pattern, but it's within that. It's actually within 12.5% of the highs, which is a higher probability double top. Now, silver would have to. We had a lot more volatility coming in, but that volatility produced the key print of 69.25. If we were to reverse back down, and the daily rotation zone would be out of the way by that point, then you could see the more substantial pullback in silver. And to put that in context, here's the weekly chart on silver. If that were to trigger, it could easily take us back deeper into the weekly rotation zone. We have not touched the weekly rotation zone since the week of Thanksgiving. So this is 1, 2, 3, 4, 5, 6. We're getting in 7 weeks. We have not touched the weekly rotation zone. Can it keep going? Yeah. Will it go forever? No. If it does go absolutely vertical again, the next the next major target would be 92 area. The next minor target would be 86.
Okay, that makes good sense. Bobby,
Like
have
if
anything?
you look at the daily on gold, sorry, Jimmy.
Sure.
If you look at the daily on gold, back in, I don't even know when, 2024, let's say maybe end of 2024, we had a couple of sideways corrections. Do you see these last 2 dips that got bought, and I'm including the most recent one, as actual corrections, or are they just like, just sort of like crash outs that rebounded and people bought the dip? I mean, it doesn't really matter in terms of like what we call it, but how do you view these versus the sideways corrections we had in the past?
These, I mean, they were pulled on a weekly basis. Here's a great example of a sideways correction. This area, when we made a high in April of 25, And then it took until we broke out roughly in September. This was a sideways correction with a slight upward bias
Right.
right here. The pullback in October, at the end of October on the weekly, that came back to the 8 EMA and then rotated back up. That was the a pullback correction. This is even hard pressed to call it a correction. It was 1 week.
Yeah.
Uh, this is just a pullback just below the daily rotation zone and a rotation back up. A pullback correction. You see here the last one in October. It took how long to even take out those highs? It took about in December. This we might have taken out. We might return to the highs in 2 weeks from the most recent highs made from after the day after Christmas.
Yeah.
Okay.
So you look at the gold, and you still say it looks like a positive chart. It's above the 8 and the 8 and the 21 on the daily. The 8 hasn't turned sloping higher yet, but it's close to doing that. The gold has touched the rotation zone a couple times. So gold actually looks safer play than silver right now because of silver's extension.
Gold is a safer play than silver, definitely, based off of where the two charts are. Because here's the weekly on gold. You see it reconnects. It's riding the rotation zone higher on a weekly basis. Silver, now that doesn't mean silver has to crash, but silver could pause.
Right.
Silver's just getting. I think all the Bitcoiners just ran to silver.
Could be.
That
So
could
do you,
be. That
if
would,
there's
that
an
would
amount of,
fit their personalities, wouldn't it?
sure, volatile as shit. But if you see that thing riding, well, it's not riding the 8 EMA. It's actually so far above and extending. Is there a number of bars where you think this is an anomaly, this is highly stretched, or do you just start to say it's curious? It's interesting.
It's been curious since about just right before Christmas. It went vertical. We got that little shock pullback in lower liquidity markets. So, but even that lower liquidity shock pullback couldn't even reconnect it with the weekly rotation zone. So, and take a look at the monthly.
Oy vey. Yeah. Okay.
I mean, if you want to take pause in anything, and yeah, could we hit 100? Sure. Again, when a market goes vertical, it's really hard to predict when it will end. But vertical markets rarely stay vertical for an extended period of time. And
yeah, that to me looks like it's time for calls. I mean
this.
Yeah.
Right.
You
Holy
see
shit.
back here. You see back in. Look at this. There's the monthly from 10 when we had the last little massive run up. And we pulled far away from the monthly 8, way far away from the monthly 8. At one point, how far were we? I'm curious. Indulge me for 1 second. I mean, we pulled away nearly, what was it? It dropped 30%. So it was at one point 30% above the monthly 8 EMA. And then 1 month reversed 2 months worth of price action in 1 month.
Yep.
Little bounce. And then look at this. It just vertical up and vertical back down. Am I expecting something at some point? Now it went down slower than it went up, which is generally the case because you got a lot of people trying to buy every pullback. Oh, this is the pullback that's going to new highs. This is a pullback. And then they eventually, at some point it breaks them and then it just grinds lower. Can we do the same thing here? Yeah. I'm going to be watching for some major reversals. If you see that pullback, you can't even spot the pullback, which was 1 week. You can't even see it on the monthly chart.
Right.
I mean, you got a wick up here, but
That's it.
You wouldn't even know if you're just looking at that monthly chart that anything ever really happened. And we're at this point, we are from the high. Let's go from the high to the 8 EMA. We're just over 30% extended. Can it keep going? Sure, but I'd be getting into at least be looking for more potential volatility. And if we triggered this daily double top, I'd be looking probably to take some more, lock in some more profits because it could turn into something of a downside bloodbath at some point.
Yep. That makes sense to me. Can we go on to some names that we covered in the newsletter?
Sure.
By the way, copper. New
Oh yeah.
highs
How about
too.
copper?
Let's do it.
There's copper. This is, I mean, copper broke out. Here's that last spike with the reversal when it got super extended from the, I mean, went this high to the weekly rotation zone. Since we're sort of on that trend right now, or this is the monthly, sorry, to the monthly rotation zone. This got overextended by 23%. Right now, we're roughly overextended by only 14%. So could this keep going? Yeah, but I know also again where trailing would be. The first thing though, I'm watching 584 is very key. 584 in the copper futures. If we do pull back, I'm watching how we behave there. And my key line in the sand right now is back at about 555. If we start closing below that, this move could be over in the short term. Other than that, trend's still up. Next targets are 616 and 636.
That makes sense.
Let's go to Google.
Google.
Yeah, good one. Because I've written a lot of calls on my Google position. And again, as you guys know, it's my biggest single stock and it has been for years, but I've had calls written on it. So I haven't lightened up in the traditional sense, but I've lightened up in the call sense. But what now?
Well, Google, we've had a play on from the unfiltered investor. It's now starting to look, we did hit the first target. It's actually bounced off that first target a couple times. And it's starting to look a little worn out also, but it has not triggered any trailing stop. Google does have on a daily basis, it is in potential double top territory. So if Google were to reverse back down and close below, and this is the Class A shares, if it were to close below 296.12, it would also close below the 50 EMA, which it has not done since, June. And we could trigger a double top pattern in that. Other than that, the trend is still up. It's just weakening at this point.
It makes sense. Bobby, what do you think about Google?
I mean, I like it. I think it's interesting to me that it's performed so weakly with the NASDAQ kind of, I don't know, not necessarily going higher, not necessarily going lower. It's definitely not leading. But I like it. I mean, we're in it in the newsletter. I like it. I think, medium term, it's going to be fine. I certainly don't think it would be one of the companies hurt by any Supreme Court decision.
You wouldn't think so. Right.
Yeah, I don't think so.
Okay. What else do we got?
Well, let me ask you something, Mike. In our normal newsletter, we have 3 targets in everything. How do you deal with the 3 targets? I can tell you how I do.
Generally, as a rule of thumb, it's still context matters. But my rule of thumb, I treat it the same way I do doubles. First target, I raise a stop. Second target, I take partial profits. And final target, I take the rest off. There are some times when we hit the final target, I will go to trailing mode based off if we've hit a key harmonic rule that says we should still go higher. There's also times when we're really overextended. For example, if I was trading with 3 targets in silver, at the first target, since silver's so overextended, I would not only raise a stop, I would take something off the table because you can get reactions at that first target that can be key turning points. That's why it's a first target. So if something's really overextended, I'm still playing it higher, I'll take some profits at the first target. If it's just a normal trade, I will definitely raise a stop at the first target.
Love it. Makes sense to
me.
I
do the exact same thing. I mean, I look, I move the stop. In the newsletter, we put stops on there and we put those as levels where that matter again to the downside. And they're not always break-even stops. A lot of the times I go even tighter than that, although it hurts me sometimes. It depends on the position. It depends on what I think of the particular particular sector that stock is in. But I will tell you that it's something that I need to break the habit of, because I'm looking at we're about to put out our 40th issue of the newsletter. I've been wrong most of the time when I've adjusted that. So we do stop adjustments all the way through on all of the trades, but I do remove some of the trade, generally about 50 to 75% at the second target. Then I let the third run. And if it blows through the third, sometimes I keep that. It really depends on the situation.
Makes sense. Makes good sense.
Yeah, this is just interesting because I mean, Google's also somewhat of an AI play. We already looked at Nvidia. If we look at Broadcom, which was, I mean, Broadcom was another one that for a while. Look at this. Look at this extension from this is the monthly chart.
Oh wow,
Went vertical. Now starting to show some cracks in here. Finally reconnected last month with the monthly rotation zone. But if we look at the shorter term, it's gone a whole bunch of nowhere since beginning of September. So you have Broadcom, you have Oracle, which was the data center sort of AI play, and that still has the probabilities of returning to closer to the 150 area. It'll get bounces like its head, but this is trading at levels that it was back in December of last year, not 25, December of 24. We're back to levels we were trading in December 24. If we look at the monthly on this one, look, at one point, look, we were all up here, 345. The 8 EMA was back at 224. And look at the collapse in that.
Boom. Yeah.
So when people say, oh, it can't happen, well,
oh yeah,
right,
can.
I would have hate to be owning this above 300, and now it's sitting below 200. Yeah, because that can happen pretty gosh darn quickly, and before you know it, it's gonna take another. I don't know what it's gonna take for this thing to regain 300 in any time soon. Because look at with this collapse, it's still trading at a PE ratio of 36. Wow. So it's not like it's cheap here.
No. And what about AMD?
AMD, here's the monthly. Now,
pull back to a great level.
Yeah.
We're trading. It hasn't still technically reconnected with the 8, but it's.
Oh, it almost looked like it did.
Is it's trading. It returned in November and December, those lows. It was still below the high it set in March of 24. So if you chase the last up move and then got caught, look at that. Like if we zoom, let's take the most recent move out where it went pretty quickly, not as vertical as other things we've seen, but it got way overextended on a monthly basis. I mean, it got above 220. Then it got all the way down to below 80. That's a big thing to ride down. Now it's gone vertical again. But could we return? We could easily return to 120. We could easily return to 100 based off the harmonics.
Yikes.
At some point.
Yep.
And PE on this one, 109. So again, it's pulled back, but it's nowhere near cheap.
No. That makes total sense to me. What now, Bob?
Let's go to an interesting one. Scott's Miracle-Gro, SMG.
Who would ever trade this company?
We did.
Oh, we did?
Yeah.
We're trading lawn fertilizer?
That's
a load of crap.
And did you buy it when it came out of the rotation zone 4 bars ago? Is that when the trigger was?
We bought it on Monday, Mike?
Yeah.
Oh, that's just yesterday.
On Monday, or actually on Friday of this past week.
Okay, makes sense.
We bought it on Friday, and this is one of those things I said why I think our newsletter is actually quite a bit better than others is because of what Mike said. Who would trade Scott's Miracle-Gro?
You guys.
And look at it go. Well, I shouldn't say look at it go. We've hit the first target, right?
Yeah.
It's hit the first target. It's fertilizer, but it's still a little, it's slightly from fundamental standpoint, a little expensive for a fertilizer company, but it pays also a 4.38% dividend, and it broke out. Look at this really nice breakout. It was trading. Last breakdown was in September of 25. It tested this area multiple times, and now it's finally breaking out. So this, I mean, it's interesting. It is overbought now. So if you're watching this today, would I'd be looking possibly for another pullback with a rising rotation zone? But it's a definitely interesting trade. You got to trade the patterns, and it's not like we try to pick out fertilizer companies. But if they have great patterns, why not trade them? And
Right.
it's also back above. Look at this. It broke down from a 200 back in July, retested it in September and couldn't close above it. Uh, and then finally built a base right along that and then broke out. And now it's back above the 200. So I'm on the pullback, pay really close attention to the 59 level. 59 is very key.
It's awesome. Bobby, what else? Got time for two more.
Let's do the one I asked you for, Mike, earlier. I want to look at Fig. I had a friend talk to me
I don't
about
give a
Fig and
fig.
say that he really likes the product.
What is it?
It's he did PowerPoints with it. It's a presentation system. It's just sort of like an AI assistant.
Uh,
Not
Well-
yet, is what I'm saying.
if it was a good buy at 140, it's a great buy now. Sorry, I had to do that.
Yeah.
Is there a fantastic buy right now? No. Again, it doesn't even have a PE ratio, so I'm not saying it can't go up, but it's got to get. There's a very significant level. It happens to be right at $40. $40 is a massive, significant level. So
So what do you
I
want to
was
see
gonna-
happen in $40? You want to see it get above there or hold?
I want to see it get above there before I'd at least be interested in it. You know, it's I got to trade the pattern, and that's been key resistance. As once it broke down in November from that, it retested it at the beginning of December, retested it right before Christmas. It is making some higher lows. You can see here, so that's the positive for it. If it got back below this trend line, though, that would even make me take a long, bigger pause. So 35 would be pretty key in the short term if it were to break down, especially if we did get a market sell off. I'd be very patient. But in order, again, for me to get in it, I'd have to see it get above 40 and hold 40. Holding 40 would be key for then I'd start looking at it as a possible trade. And if it did get above 40 in the short term, my minor target, I'd have to at least raise a stopper on that 50 EMA. But then the targets I'd be looking at about 40, mid 44s, 47. And then if it really put on a run, would be 50 to 52.
Makes sense. Can we look at XLF as in
Yep.
final?
Oh, XLF. I looked at that today. There you go.
So, for you guys who don't know why I'm asking for it, the banks have made new highs. Well, this has. I think it is a commentary on tax relief, regulatory relief, potentially a accelerating economy in 2026. The chart looks pretty sweet. Thoughts?
I mean,
Right,
still
Mike.
pullbacks into the weekly rotation zone are still buying opportunities. It is getting overextended now. So this is where I would not be chasing it. The last good move, here's the daily chart I switched to. There was a very key significant level right around this 54.40 area, which we
Touched it,
retested
rejected it.
before Christmas, ran up, came back down. This was a percent B buy setup, had to be traded intraday. And I will get in these. We've talked about these in the newsletter also, Bob, right? We watch for breaks above the key highs. And then as long as it closes above that level, it's a hold. And this one obviously closed above that level, but Friday to Monday set up a percent B buy. So in short term, it not only had a rotation zone buy, it had a percent B buy. And let's just see, I have not put on the longer term targets yet. I did not do that. Let me do it right now. Got to get my correct anchor. So Again, 56, which we've already held on. By the way, on the next pullback, watch about 55.75 to 56. 57, mid 57 is the next key harmonic target higher.
Okay, that makes sense. Good. Bobby, do you like my thesis on banks? What do you think?
I do. I mean, I think it's a very good play. I think the banks are going to do really well this year. I think they have to lead. I've got one more if we've got time for it.
Sure, I do.
Lulu. And I'm looking specifically for it to turn back up and finally break above its 200-day, Mike. I want to see what kind of problems you see in there. Because again, I have a thesis on consumer discretionary that once no tax on tips and everything else kicks in, consumer discretionary is going to start to relatively outperform.
Yeah, I mean it's been below the 200 since the collapse from bad earnings in
Yeah.
June.
Yeah.
It got really cheap. I mean, right now it's still trading. This is not a forward PE. This is just a backwards PE. It's trading below 15. It was even cheaper than that. I think this was around 12. It broke out of this really nice base here with the last earnings when it gapped up. It's still because it's finding key resistance at the 200 area. It's still got to get back above this 225 area. It's got to build a base above 225. That's going to be very key. So I'd be looking, if you're not in it already at the breakout from this base, you can see it right here. Oh, by the way, it hit the weekly 200, you see, and a very key significant level that was established back in 18. So this were the highs in 18. It confirmed them here. This was the little COVID blip down, but that was the last test of that level. Then it was off to the races. So we've hit those same highs and the confirmed support back from 18. We're bouncing off of it. One thing to keep in mind, this still might have some heavy lifting to do. And this is why I wouldn't get overly greedy on this. Let's say you're already in it or looking to get in above the daily 200, this 250 to 258 area would be a very strong area to aggressively raise stops, if not take something off the table.
That makes sense.
Because look at this massive support base that held in 22, dipped below it slightly in 24, but never closed below it. Dipped below it briefly in April on the last pullback last spring in the whole market. And then look at us slice right through it. So this is,
and it's going to be the 21 when we get to it too, right?
Exactly.
Yeah.
So I would not be saying, oh, I'm betting all of my money in Lulu. We're going back to 400. I'd be This is one instance where on this key target, not only would I be raising the stop, I'd be taking something off because we could easily rotate back down, still make a higher low on a longer term basis, and set up some more buy patterns for another run at that level. But I don't want to ride it to 258 and then see it come back down to like 200 and go, oh, now I'm in it for 6 more months.
I love that. Want to call it?
Yeah, I'm done.
So people who are watching, if you like Mike Arnold, again, Mike Arnold's a genius at this stuff. It's amazing. He's changed the way I've traded, changed the way I've invested, and the way I construct my portfolio. You can do the same. You can sign up for the Unfiltered Investor newsletter. Bobby, we're not offering any specials yet, right?
Actually, it may be over, but we're offering 26% off a subscription. I think it's a quarterly subscription.
Who the hell picks 26%?
It's 2026.
Oh, okay. I didn't follow that.
If you want to wait,
One
next
better
year will
than
probably be
25.
27, but you'll have
26.
lost more money on the good trades. So.
Right. No, but the hit rate has been astounding so far. I'm amazed at the success you guys have had. Thank you for that. I'm so glad I'm a part of it. I appreciate it. Our other sponsors, Marco at Independence Arc Farms, please patronize him. Buy grass-fed, grass-finished beef. You will not be sorry. And the American Gold Exchange, Dana Samuelson. Where do they find the link for that? Is it on our page somewhere?
Yeah, I think it's on our page.
On our page. Check it out. American Gold Exchange. You get physical gold and silver delivered to your door. the guns and the guard dogs, and well, then that's up to you. I have nothing else. I am Jim Uriel. That's Bob Ichino. That's Mike Arnold. Thank you for joining us on The Future's Edge.
Thank you.